Hello guys, and glad to have you on board again today. Still happening in here without video recording and all the more pleasant stuff for you guys visually talking about. But of course these things will be restored as soon as possible. Still just trying to get myself back on my feet before doing such a thing. So don't consider that these webcam free videos and stuff recordings are going to be the new normal stuff. We're definitely going to stick with the improvements we've made this year, but it's just a temporary drawdown at some point. Anyway. That being said, let's get back to our beautiful market and update our weekly scenarios, as we're mostly halfway through it, or more than halfway through it, and that plenty of stuff has happened until then. Of course, now indices are pulling back into their ranges. Yesterday into the live room, we've talked about this thing for our weekly educational purposes session, and basically this is exactly what I wish you guys understood, because in these ranges, sometimes time can be a real bitch and a real pain in the ass. And if we have a look at the 15-minute chart time frame, even though this is a 15-minute chart range, it has been lasting a very long, much longer than a usual range. And in that perspective, framework totally got itself off course. So in that perspective, of course, time will be a definitely shitty variable into your range, which means framework will totally be useless to figure out the maturity of your range. Just as a quick example, if you would count down your boundaries out there, you would do first, second, okay, third, but not a fourth, so still third, and you would be doing fourth, fifth, sixth, seventh, eighth. What the fuck is that? Okay, you would just drive yourself totally crazy. Things in here, when you see that there is a huge disparity in terms of time spent out there, you definitely know that your framework context just makes no sense. They are time-based, at least they're impacted by time. And when time gets off the essence out there, then definitely fuck up the framework context. So you cannot use these to use your maturity of this range. And in that perspective, just make it pure and simple. Use fibs. Remember that that is one of the main usages of Fibonacci's in the strategy. The fact that fibs don't give a shit about time. They also provide a suitable risk-reward ratio to trade with a minimum 61% and on normal cases 76% retracement. That provide a significant enough risk-reward ratio for speculation in a range, but they do not do just that. They also help filtering noisy ranges just like this one, in which time is really a painful bitch. Because in here, of course, if you just put your fibs, you clearly see where the range boundaries are. First, second, third, and we're just getting to fourth. There's no 6, 7, 8, whatever that happened in there, because in here, whatever happened with framework, it's totally off course. Okay? So it's really important that you guys understand that. Okay? So you always count the wave boundaries as the ways you cross over the down zone. Okay? So in here, you don't necessarily have to get to the red area, but you need to close multiple times outside the down zone. Okay? So you have a wave range. We started to build a fourth range boundary just yesterday evening, okay? And today, as you can see, we keep falling, which means this is where we care about the range boundary today. There is definitely going to be an interesting area to deal with today, and a big question mark on whatever type of signals we'll get out there, but this is definitely going to be out of interest. I'm eventually even going to do it live. So we really need to study the potential underlying signals out there. As you can see, we're still in a bullish motherfucking oscillation, so this is definitely something interesting now. I wish we could get some signals, because I'm not going to blindly trade out of this, but this is definitely an area of interest, okay? For those who want to buy, of course, for those who want to buy. Anyway, so moving further. Oh, well. I should deal with this with the most experienced traders. Fuck it. Well, anyway, well, you first. So that is for stock market. So we're waiting to get information from this range. Are we going to break it down? Yes, no. Or are we just going to build a fourth range boundary and keep pushing to the upside? That would be the H1 timeframe reference chart, because of course experienced traders only can look for this fourth range boundary on the 15-minute chart time frame. This is red level stuff, okay, fourth range boundary trade. Otherwise, you could assess that you, oh geez, there's a problem with the fibs, with the zigzag. It should be going out there. I mean, anyway, I'll study this bug. So otherwise, you guys can trade as a trend follow opportunity, but you have to trade with the trend channel. So this would be the H1 time frame. So today, you would eventually be looking for H1 time frame signals on this trend channel. It has to be a trending signal, so either oversold cluster or bullish momentum or hidden divergence. All of those things could work out, okay? And of course, for a trend follow opportunity, which would be a pullback in here, you would need to close below 50% context. So like I said, there's no emergency getting in right now. You really need to close below 50% context in order to get a suitable signal for pullback trades. Remember, we've made a course on this one, so all of these informations are not just invented now. They really have been recorded, and I hope you know about these if you're willing to trade these things, okay? So there is no rush this morning to get in. If you want to go for a pullback, we need to close below 50% context, and we're just getting to it, okay? I could state the level so you could see it. It's just that I personally don't use it. Okay, so we're right there. As you can see, 50% context is just right here. So we're getting there. We just dipped in a toe into the interesting territory, okay? So today, this is the area in which we can look for supportive signals, but you need to wait to get a trend signal on these H1 time frame if you want to trend follow this thing, and if you think it's going to go higher, okay? Otherwise, we're still in the range is mature, and we wait for either a breakup that will double down this exposition to the upside and lead us to the technical area we've talked about. Option number 2, we retrace, and we're going to have some troubles. That means we cannot sustain previous historical highs, which is this level. Okay, so right now the only thing we're actually doing is just oscillating across. As you can see, this is previous historical high. We've gone above. We didn't manage to stay very long, but we're not falling off the cliff either. So it's really all about whatever the fuck is going to happen out of this range. And as long as we're in there, there's nothing we can talk about. But just waiting for range boundaries. The bulls will support these areas, the bears will resist out there, and sooner or later one of these will fail. That's simple as that. Don't make it overcomplicated. We've got to talk about cryptocurrencies, lots of things to talk about. I've sent you a message yesterday evening telling you that I see some risks rising, specifically with the dominance, and therefore I decided to cover the portfolio for 25%. Meaning that it's not hell of a bear trade. It's definitely not that. I'm not net bearish, and I'm not shorting Bitcoin. It's just basically I'm taking a net cover position for 25% of those I have to the upside. So I have some Bitcoins, and I just short sold 25% of these. It's just simple as that, okay? So at that point, definitely not a big deal, really a tiny position sizing on this first cover trade, just because I wanted to go down to sleep with a safe belt on, with a safety belt on the car. That's simple as that. It's just I knew there could be something to happen overnight. I simply didn't want to wake up with a Bitcoin that had lost $1,000, and in that perspective, I just decided to cover overnight. Now, of course, I'm having a look at the goddamn signals today. Okay, yesterday trade was just a safety belt. Now I need to figure out if this is truly something that worth it, yes or no. So in a daily chart, of course, we are into my big technical area that lasts from 16K up to 18K. We've studied altogether in a shorter time frame that we do have a speculative bubble trade or a parabolic skimming trade in which we follow some simple sets of rules with the trend channels. We've reached out to the top of the current trend channel, and so far we are failing to extract on top of it. Remember that bubbles need to break up each and every trend channel and to accelerate, creating a steeper one, and so on and so on, and shortening the time frames until the structure collapses all on by itself. Though, of course, the fact that we're failing on the top of this trend channel doesn't nearly mean this is bearish. It just means if this is truly bullish, we're going to have to do better than that. It's really all about it, because these structures cannot sustain themselves if they're not pushing higher and higher and accelerating faster and faster. This is something that goes parabolic, that goes quicker, and in which the demand is supposed to shrink over time. So if the demand isn't... an offer is supposed to shrink over time. So now we're supposed to see volume going down. Instead of that, I see volume going up, which I don't like. This is one of the intermediate signals I take in account in the current situation. I see volume rising. I see the market reacting into a dangerous level, though there are possibilities that we pull back to this trend channel. But that doesn't mean it's going to be bad. It just means retesting the trend line. And remember that we've done that the other day, and that hasn't triggered any such a thing of a bear trade. But today, I would say if we go back there, there is a very likely possibility that we shift to some more downside, and I'm not necessarily sure that there will be huge rebounds out there, but probably some things like that. Okay, we're going to start deteriorating and could be pullbacking significantly. Okay, so could have some kind of a speculative release in here of the energy, but until then, this is just speculative. So I'll need to see where the fuck we're gonna, what the fuck we're gonna do out of this triangle. And if these triangles bottom today gets to be supported and broken up, then of course I'm gonna take down this cover trade. It's purely and simply this. Okay. So this morning we've pulled back. We're back into supportive area, just like we are with the stock market. There is a big question mark over our heads on whether or not there will be supported prices out there. And I am no magician. I don't know shit about the answer. I just know that I was willing to cover in here, just like I am partially covered on the stock market, just not to be fully exposed to market behaviors, because I know these things can reverse violently if they reverse, and I'm not necessarily betting on the fact that they do. Otherwise, I would be net bearish on Bitcoin and net bearish in Wall Street, which I am not in both of these cases. So I'm mostly concerned about the short-term momentum that could rapidly reverse, and if it turns out to confirm this reversal, I'll eventually consider doubling the cover trades. It's simple as that. I said, anyway, I'm not going to go any way further than 50% cover for this portfolio. Okay? So it's more about arbitraging, reducing exposition, rather than going net short. And you really need to understand that a professional trader never sees the market as either 1 or 0, at either buying or selling. A professional market behavior is always, oh, how the fuck do I navigate in between without, and we rarely gets to reach out a totally bullish exposition in the market. I'm always buying some stuff and selling some stuff. That's always how it is, and it's always going to be that way. Okay? So it's more about I'm having some short trades on some asset that I'm buying in longer time frames. This is arbitraging. Of course, this is professional stuff, and this is things that I will add to the educational lesson, trading lessons, but basically this is really the end of the coaching. So this is something that I'll get to record probably right by half of next week, because there's still plenty of intermediate stuff we've got to talk about in between, and plenty of less aggressive advanced stuff to talk about. So it's really going to be the last part of these strategy trading lessons, in which I'm going to teach you everything I know about hedging strategies, modulations, and stuff like that. Okay, so I'll teach you all my tips and tricks. Of course, just a matter of time before I record these. Until then, of course, I try to explain it to you the most clearest possible way, but of course it's hard to explain professional stuff to people who not necessarily have the knowledge. So yeah, understand that I am just modulating the portfolio's exposition right now. I'm not going nearly bearish, so this is really the key element for you guys today. Until then, I wish you a pleasant day, and I'll try to keep you updated as soon as possible, because I know lots of you guys care about what the fuck I do with Bitcoin. So of course, for transparency purposes only, I'll let you know ASAP when I trigger any kind of action. Bye guys.